Hi there. Okay, we're on video 50, but number 12 of module 3. And in this video, we're going to talk about the MACD indicator. Now, the MACD indicator stands for Moving Average Convergence Divergence. Alright, now we gave you a few examples in the second module, but as we move on into the modules, I'm going to show you a different indicator called the iMACD, which I mainly use all of the time in my analysis. This one here is the MACD indicator that comes default with the platform, and you can tell if it comes default because all of the ones that are shown here in the indicators ones are default. Alright, and you can't really modify those. Okay, and here is some custom indicators that you can modify. Alright, okay, so the way we go about adding that indicator on there are two ways. One is by left clicking and dragging and dropping. Alright, and you can change the colors to suit. I've actually done mine black and red there. What I'm going to actually do is right click and go to the properties here, and I'm going to make this a little bit darker. Okay, maybe it's, can I actually change this to a darker one? Alright, okay, that will do. Alright, so that's going to make it easier for everybody to see. Alright, and the other way you can go ahead is go ahead and click on the templates and choose VID50 strategy number 10. Okay, alright, so by now we should be getting pretty used to the Accelerator oscillator. Alright, and we're going to use the Accelerator oscillator on the 4-hour time frame in conjunction with the MACD indicator. We're going to try and find some buy and sell signals. Okay, and we're going to really apply the same rule as we have done before. And you see, like these first two bars, we want this to basically line up with the first two bars of the MACD indicator, but not underneath the vertical scale, but above the vertical scale. So when we see these bars here above the vertical scale, we also want to see these above the vertical scale. Alright, so if the first bar lines up with that first bar, go long on the next bar. If it doesn't, wait for the second bar, and if the second bar lines up with the indicator, then go ahead and take that next trade. So here is the second buy, I believe. Let's just take some of that off. Alright, okay, so this one here, you can see the first bar up on the MACD is above the histogram, which is good. This one's actually on the second bar. It's not actually on the first, but the second one is just fine. Alright, so we take a look at that and we come up here and we wait for the close of this bar, and then we can go long. That one actually went up to 122 pips. So let's take a look at our support and resistance levels. Well, there's a support level, so that's okay for a buy signal. Let's go ahead and take a look at some other previous areas where the market may have stalled. Alright, there was a bit of support there. We have a little bit around about here as well, and we have some more around about there. So that should be enough lines for us to go back and see if this would be okay. Alright, so in this particular instance it does work out okay. Here is our first bar right here on the MACD line, and it lines up with our second bar of the awesome oscillator, and it happens to tell us to go long after this bar. So this is where we would actually buy. We can buy there because we've already done our analysis with our support and resistance levels, and this resistance level can now be our take profit level, and we can see indeed it does get hit. Now it doesn't always get hit every single time because we might over analyze where we're going to put our support and resistance levels. So we account again for a little bit of human error, as we've discussed before, and we'll take a look at our potential gain. So we'll just take our crosshair tool out from here to there, work out what the pip difference was, and I believe it was 122 pips. Alright, I normally account for 20% margin of error, so we're looking at around about 20 about 23 pips I'm going to shave off of that, so I'm looking at a 99 pip target. So a 99 pip target will come down to there. So we're looking within at least 12 hours our target gets hit. And if we're doing that at $1 per pip, we made $99 for that particular day's trading, which is awesome stuff. Alright, it might not seem like a lot of money for that particular day, but look at it over 5 days. Okay, that's $495 right there. Alright, look at that times by 4. 4 weeks, 5 times what this figure divided by times by 4 weeks, you're going to get almost 2,000, so that's 1980 bucks, and that's for the first month. Alright, and then you can times that by 12, that's $24,000. Alright, so look for the long-term goal, not the short-term goal, because the short-term goal will have a real good battle with your brain, and it will say, well, this ain't no good for me, I need more money, and then you're going to push yourself. Please don't do that. Alright, please don't do that, because it does get frustrating, and you basically will need to walk away and come back after a few days when you've calmed down, or when your mind's come to an even keel and you can start working out what you need to do. Alright, so please don't push yourself into the point where you're going to give up. Alright, and try and think of the long term. Look at this, 1,900 bucks per month. That's not bad, right, for doing, well, basically sitting at home enjoying your time with your mum and dad, or with your your brothers or your sisters, or even with your children. Even your wife can stay at home, so you can spend all the time with your wife. Enjoy that quality time with each other. Alright, or your husband if you're a lady doing trading. Alright, so think about the long term. Only act when the signals tell you when to act, and not beforehand. Alright, let's show you a sell signal opportunity. Alright, okay, so we're looking for this first bar here, but we're looking for either this red bar or this red bar to line up with that one. Well, it doesn't, it goes all the way over there, so that's no good. Alright, okie dokie, let's go back and let's see if we can find some more. Okay, we're almost there. And let me just pause the video for a moment, and I'll come back in just a second. Alright, I had to go back all the way back into February area just to find a suitable sell signal. I mean, this happens, okay, but there were a lot more buy opportunities than there were sell opportunities for this particular strategy on this particular time frame and that particular currency pair. It happens. Alright, so if you don't see any sell opportunities and you keep seeing buy opportunities, just take the buy opportunities. It's a no-brainer, really. Okay, so here's your first down bar, and here's your first down bar here, and then we wait for the next one, because we don't want to get in on that bar until it has finished. Alright, so you could come in, the time would be, say, well, let's say the server hour clocks was sitting at 11:05, alright, AM. Okay, and that was the server time. And you're on a 4-hour bar. Okay, and you come in and you're like, oh, okay, so I've got to wait 55 minutes. Okay, before this bar completes itself, and when it does, this will then turn into 12 noon. Okay, alright, so you just basically go in on the next bar, but we need to apply some of those common sense rules in there that we talked about before. We're on a support / resistance level there. Well, actually the prices are just a little bit below the support, so it's really a resistance level, so that's good. So a sell trade opportunity right here will be fantastic. And you can see that we've drew some of these lines in from our previous analysis when we was looking for that buy trade. Well, we would do the same thing here. You would look back to your left, you'll look for previous lows, and you'd look for previous highs, and so forth and so on. Alright, and areas of congestion in the market where it's basically gone sideways, like you see here, we've used that as a marker as well, and it's gone kind of sideways there, and there's another marker. Alright, and so forth, so forth, so forth, and so on. So these lines all work out well, and we can use these for future references as well. Alright, and we can see that the market did come back down and it hit that area. Alright, so again, we allow for margin of human error, bring up our TP up a little bit, and hopefully, fingers crossed, it will go ahead and hit our trade, our TP area. Alright, so this does take a little while to get hit. We're getting in on that second bar, which is just a little up bar, and it goes up like 93 pips or something like that, but it does come down to around about 113. So where would we place our stop losses? Well, we use previous highs. Alright, and we just place it above the previous high. Why do we place it above the previous high? Well, I'm hoping now that when I'm putting these support and resistance levels in, that you'll understand that the market does tend to reach that level quite a few times. So we'll place it just a little bit higher. Alright, 5 pips, 10 pips, 20 pips. You would have to experiment with yourself, because there really is no magic number. Okay, now also as well, I think I've mentioned this in a couple of other videos, but I will mention it in this one as well, is that sometimes brokers will hunt out your stops. So I don't tend to put my take profit targets in and my stop loss targets in until it's actually achieved a profit. Okay, now you might say to yourself, well, Loz, that is a bit risky. Yes, it is. Well, Forex, even driving is risky. Driving without your seatbelt is risky, but we do it. Okay, so we drive with with our text phones, with our phones, and we're texting. It's illegal in some states, in some countries and whatnot, but we still do it. I don't drive, but okay. So yeah, so there you go. So you've got to really persevere with those areas, and if you find that when you're putting your stop loss values in and you're getting stopped out, I wouldn't really punish yourself. I wouldn't make your mind go round in circles and thinking that you've made a mistake. I probably would say that you haven't, more times often than not, if you are following what I'm saying to the letter. Okay, and I would put it down to the broker. Alright, and it's a little bit of a, you might say, well, what's the point in trading in if the brokers are out there to just take our money away from us? Well, that's what they're there for. They want to take your money. Alright, it's just like a casino. They're there to take your money. Alright, we just need to find ways how we can take their money by using strategies. Alright, and maybe accept the loss from time to time. Alright, and I'll allow our strategies to play through for the long-term result. Alright, and if you stick with your proper money management, you're not over leveraging your account, i.e. you're not using too many lots, alright, based on what your balance can handle, or based on where your stop loss values would be. You're not going to go in at $2 a pip when you've got a $5,000 balance and your stop loss is going to be 250 pips away, because that's $1,000 and you've just taken like 20% off your balance. You don't want to do it like that. That's just a little bit over, a little bit silly. A little bit careless. You want to go in at a $5,000 balance. You want to probably go in at maybe 50 cents a pip. It might not seem like a lot of money, but again, trust me, when you're getting these trades right, over a period of time, after you've had a bit of practice, or if you've already been trading before and you've not really established a way to accumulate profits from the brokers, it's because you're probably trading too high a leverage, or you're getting a little bit too overexcited. Okay, so calm down a little bit, come down to even levels, and then use a lower lot size, and you should be okay. Alright, for the most part. Alright, so give that a try, ladies and gentlemen. Alright, see how you get on, and again, and there is the template there for you already made. Alright, it's not going to switch to the 4-hour time frame. You would need to switch to the 4-hour time frame yourself if you prefer to use the 4-hour time frames to study from. I would suggest that you do. Okay, and see how you get on. Alright, so until then, I will see you in the next video. Bye for now.